Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Tuesday, February 2nd, 2016. So, we are going to be going over a lot of stuff today because there's been some shockers in this market, but what I want to be able to go over is that when something happens that's not anticipated. Last Friday would be a perfect example. If you have the data or the information that nobody else knows, you don't panic and do something emotional, because when you make that kind of trade, you are going to be wrong 99% of the time. And pretty much anybody that covered their shorts on Friday, if they didn't cover on Friday, they definitely got forced out yesterday when we took out the highs. But if you knew that we had sentiment that hit 98% and we were expecting a turn, you would have used the strength to short instead of panicking and covering, and we saw what took place today. So I'm going to go over all of that today, and I have a lot to cover, so I'm going to get on it right now. And at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. And we do this through Woody Dorsey's proprietary sentiment database, as well as his technical turn dates, which are the reversal dates, and then we combine them with regular technical analysis to see if there's any kind of divergences, support, resistance, to try to pinpoint where the where the turn would take place. Now, nothing is going to be 100% accurate, and we will never claim to have that. But what we're going to do is put the odds on your side, and if you know like I said, the information that nobody else really knows, you can make a better educated guess as to what to do, and that's really what we are all about. So, our market timing matrix, it goes off of Woody Dorsey's technical turn dates. These are usually given out, anywhere from 3 to 10 days before, and that's the projected date when the markets are going to reverse. And then from there, we match up sentiment to see how traders are feeling. So if there's a reversal to the downside that's expected on a particular date, and we have sentiment that's at bullish extremes, we then go to price and look for technical divergences, support, resistance, to see where the price will change. So last week I had left you with that we were looking for upside into the 26th, 27th, and then from there we are looking for declines. And what we had put out today was that we had a 96% bullish reading on the first. That was yesterday, and that was sent out to subscribers in the morning. And as you know, we did have a late day rally, and that set up the third phase of our market timing matrix, which gave us bearish divergences. So we knew that we were expecting weakness into here. Friday was the curveball where we had Japan went negative interest rates, and they decided to cause a massive short squeeze. But again, we knew that we were expecting weakness, so it wasn't a time to cover your shorts. It was time to be looking as far as where you wanted to take a short position. So we got the turn today. The markets pretty much gave back everything they brought up on Friday, and this weakness is set to continue into our next turn date before we are going to get strength into the next turn date. So these things are all actually set ahead of time, and this is what I mean by controlling your emotions. If you know when to expect a low and when to expect a high, you keep an eye on sentiment, you keep an eye on divergences, and you position your trades that way. So again, nothing is going to be 100% accurate, but these are going to be, as you've seen so many of these videos, they're a lot more accurate than anybody else out there, and you're able to control your emotions. And really, by able to track what sentiment is, you don't want to be jumping in on a long side if you have the euphoria and we have bearish divergences and a technical turn date. Just like you don't want to be selling your long positions as we're capitulating, and we have sentiment that's extreme bearish readings and bullish divergences. So that's really kind of how everything is measured. So we had, this is actually a mistake. This is 98%. But in any case, we had the rally going. We've had some series of bullish sentiment readings, and that was, we had an expected turn in here, as well as bearish divergences. So this 0% right now is important, and this was the last low that we had. So if it gets taken out, then we're going to see more panic. It's going to be an important low, and whether it gets taken out or not, we're not sure, but we think that once it gets down in that area, it's probably, could be a decent little buying opportunity. So the current market environment is that we're in a long-term bear market. Now, our long-term is anywhere from 6 to 12 months. We're not looking at years down the road. Intermediate term, we're neutral, and there's going to be a buying opportunity low that's going to be approaching, and that's probably going to be on our next reversal date that we have. And short-term declines are expected, and this is what we saw taking place today. So let's take a look at our regular charts. And yesterday, when we had the drop and then rallied up, we had bearish divergences on the 15-minute chart. And if I go to a 60-minute chart here, this rally right here, it actually did more harm than good for the bulls, because now it set up bearish divergences on the 60-minute chart as we ran right into a 50% retracement. So if you remember time, we are expecting the actual top to come right, where is it? It's 27th, right here. We got the pullback, but then Friday gave us the big short covering rally, so it got extended. But we knew sentiment was hit extremes on Monday, and we were also looking at bearish divergences. So again, do you want to jump into this rally here as bearish divergences, high sentiment, and we were expecting weakness into the next turn date? No, you want to be shorting it, and this is it. It went right to the 50% retracement, and from there we saw it get absolutely walloped today. So there's still some room to go before we're into the extreme oversold levels, and we still have some time to go before our next turn date. But as you noticed what took place on Friday, the way that they turn these markets higher, that next turn date's going to be a decent low, and it's the expected rally is probably going to last longer than some people are anticipating. So when everybody's going to get bearish, because I still believe that we have some lower levels to go, if you know exactly where sentiment is, if you know when to expect the next turn, you're not going to follow the herd. You're going to be taking the other side of it and layering in a long position. And this is how you're able to make 1,400 points in less than 2 years. This is the information that you need to have to be able to make educated trades, and you have to do work on your own. This isn't, we don't tell you when to buy or sell, but when you have the one of the best market timers in the world telling you what he thinks, and you're able to back that up through sentiment readings and stuff like that, and then bullish and bearish divergences, it's almost hard not to make money. So like I said, each week our specials change. This week it is going to be $99 for the first 45 days. It's only open to the first 20 subscribers. And we are also going to be, anybody that signs up, a free membership to MarketsPath, nightly video reports, morning notes, email trade alerts, as well as our trade room. You get full access to that as long as you remain a member of the Sentiment Timing. And with that, until next week, good luck trading and have a great night.